Hello guys, FX Bright here, the trade guru. So on this video, I'm going to be teaching you guys how to spot a trend before it even begins. And I'm going to be teaching you guys also how to even trade these trends, the nuances, the Fibonacci's. So if that's something you'd like to know, stick around to the end of this video and you'll be walking out with more knowledge and more money in the bank. So let's take a look at this example. This is boom 500. Let's analyze boom 500. Let's see if you can see what's happening in boom 500. You can see that this price has been going down for a while, all the way to this point. Now, like I always tell you, you trade the trends, but you see every trend has an end. No trend is just going to keep going forever. So at some point, you're going to expect the trend to come to an end. And in those points, there is a way to think about the market. There is a way to reposition for the market. So if you can see what boom 500 has been doing for a while, you would immediately see, like I said, it's been going down. But let's try to understand where the market is currently. Like I told you guys, the first thing you want to do is that you want to be able to capture the support and resistance zone of price firstly. So you see, I'm using this rectangular tool, and I like to call it the zone tool because it helps me capture price in a zone. So this is where the market is. Remember, this is the weekly time frame, and I can check, like I always tell you guys, you have to be able to analyze from the top to the bottom. So this is where the price is right now. This is the monthly time frame. You can see how this place has acted as a support, and price is currently here reacting as another support. So this is a strong zone. We're going to check weekly time frames to see again how it is. You can see how price has bounced here, resisted here and bounced, and this place is a very good support zone. So whatever trend has been going on here in the past couple of weeks, you have to be sure that this side is very strong enough to resist that trend and cause a reversal. Now, I'm going to go to the daily time frame to see what's going on. Now, listen. Now, this is the trend that has been happening. So as long as you've been in this place, you're going to be selling. But whatever sell position you must have taken on this side, you probably have to start coming out somewhere around here. Why? Because in the higher time frames, you can see that that point is supposed to stop the movement of this trend. So we're going to take out a trend line, and we're going to be able to at least capture to some degree the movement of this market in a trend line. So I'm going to take out another trend line so we can box this whole move in a channel, right? So I'm going to put this one below here. All right, good. So I just want to capture the recent trend of the market. So this is where the market is currently, at the top of this trend, trying to break it. How do you even know that a trend is about to form? Now we're going to go to the 4 hours time frame, and this is where I want to show you guys something very important key. I'm going to remove this red zone here because I want to show you guys something, but just assume it's still there, okay? So this is the 4 hours time frame. Now just assume the red is still there. That red line is showing you that this point is a place of support in the highest time frame. So what you need to understand is that if you take a look at this point, for instance, you will see how the market was moving, right? And at some point, the market was able to form a support zone. So this support zone, if I draw a line here, what you will see that the market did was the market bounced on this support zone. Remember, this whole place is a support level, and you can see I just deleted the red line so we can see very clearly. So the market was able to bounce on this support zone. Then what you will see the market do is that the market made this move. Now this move is called a liquidity sweep. It's a fuel for the market. It's like going to the filling station and getting fuel so you can drive. So if you see the market does a liquidity sweep around the support zone, just know that there is a potential for the market to start buying or moving in the opposite direction from the trend. So look at this point. What does liquidity sweep means? That for some people that would have taken this point as a buy, maybe as a double bottom, they would have put their SL somewhere below this double bottom. So the market will act as though it's going to go up, then it will come down to hit all their stop losses. Remember, if you're buying here, your stop loss is a sell order. So if the market goes on to hit your stop loss, that means you've sold at cheaper prices to the big guys. So what the big guys will do is that they will buy all your market at cheaper prices somewhere at that bottom, right? So once they buy all your assets at cheaper prices, you'll see that the market will begin to rise. So anytime you're able to spot a liquidity sweep at the support level of a trending market, be very, very wary to know that there's a potential for the market to start moving in the opposite direction. So now, let's assume you were able to understand, okay, a liquidity sweep has happened here and the market is about to buy up. Does it mean you start buying immediately? Not necessarily. There is a way to start buying immediately. And I'm going to teach you guys in some other video. But on this video, I want to stay professional with you guys. Now, what the market will do is that the market will start buying up. What you're going to do is that you're going to find a way to understand the move of the market. Now, this is the 4 hours time frame, and I'm drawing this line to capture price in a place where I will believe that the market has actually begun an uptrend once the market is able to break this trend line. So let's go to the 1 hour time frame, right? So look at what I'm talking about here. This part is a strong trend. So look at what I'm talking about here. This part is a support zone, is a resistance zone. So if I put on this resistance line here, so you can see how the market was able to bounce here, resist here, and also reacted to this side all the way down to this point. So the moment the market is here going up, I will be able to draw this resistance zone. And I want to see how the market is going to react to this resistance zone. Remember, I'm trying to tell you how to buy this market the moment you're able to spot the end of the trend. The moment you're able to spot the end of the trend, how to get into the early move of the market. Now, as the market is able to go up, you can see that this resistance resisted the market a little bit, which is very good. The market came down for a little bit, which is also very good. Then the next time the market was going up, the market broke this resistance to the upside. That is very beautiful, because this is telling you that the market has actually gained momentum to move in the opposite direction of the trend. So the market has actually now moved. Now, does it mean that you're going to enter the trade at this point? No, not really. You're going to wait for the last retracement to happen. That will ensure you enter the market. Now, follow me closely. I'm teaching you guys this so you can become very good in trading. Now, look at this. The moment the market made this move, came down and broke. This is called the ABC move. This is called the ABC. Some other people will call it the 1, 2, 3 move. As long as this happens, for instance, as long as the market didn't just come straight up and break this line, as long as the market made this 1, 2, 3 and broke it, this breakout is a valid breakout. So the next thing you're going to be waiting for is the last retracement. You need the market to retrace to this support, this resistance that will later turn to support at this point. Beautiful. So when the market began to retrace, you're very happy. Now, this is the point where you now begin to take these very seriously. Now, remember, the moment the market gets to this point, remember this point is also a confluence. I drew this trend line here, and this support turned resistance area, this resistance turned support area here, and you can see the two of them meeting at this point, right? So this tells you a lot about this side. So this side is strong enough to push the market up. So it is at this point you begin to take your buys. The moment you see the first buy pressure, at that point you begin to take your buys. If you want to be very conservative, you can go to the 30 minutes time frame. This is where it is. You can go to the 30 minutes time frame again and pull out another support or resistance zone and wait for a retracement. Personally, all I need is the first bullish candle, engulfing candle, and you can see there's a bullish engulfing candle here. The moment I see this, I'm already in the market. Also, if you want to be very conservative, you can wait for the market to also go up, break, and make another retest. On this next retest, you can take your buys and hold it all the way to the top of the main trend. Remember, the market has not fully engaged in a reversal of this trend yet, because when you go to the weekly time frames, the daily time frames, you will see that this is where we took this our trade, and this is where the market is right now. We're in profit, but the market needs to make one more move before we are able to understand that we have actually changed the trend, because this place where the market is right now is also a support which will turn to resistance right now. So the market, this place was a good support, price bounced off it, now price is here. Now, like I told you, this is also a liquidity sweep. You can see the market came down here, bounced, and did as if it has formed a double bottom on this support, and as it was going up, it dropped down. So you see the people who were able to buy here on this point, this dropping down will take them off the market, right? So this is the first time this market was making these close to this. Remember, this whole place is a support zone. So because it's a support zone, the market came down and take off their liquidity. Now, it's very important at this point is where we'll now start looking for our buys. And I told you how to look for the buys. This is why we go to the 4 hours time frame. In the 4 hours time frame, we waited for this liquidity sweep to happen. Once it happened, it bought, and we took the buys the moment this retracement happened. Another way to understand this retracement is by taking up our Fibonacci. Once you use your Fibonacci and you draw your Fibonacci, you can be able to understand that this point is a Fibonacci retracement of about not up to, is it up to 60? Let's check it. All right, not up to 60. This is a Fibonacci retracement of 50, which is a very good Fibonacci retracement. The main Fibonacci retracement are 38.2, 50, and 61. So the price is retracing at the Fibonacci of 50, which coincides with our support and resistance zone on this side. So which is very beautiful. So at this point is where we take our buys and take it all the way to the stop, waiting for when price will eventually break. Because the reason why we are saying price is potentially going to eventually break is because of this liquidity sweep that has happened here. So guys, I hope you understand what I'm talking about. If you want to learn more about how to trade synthetic indices and how to become very profitable, my phone number is in the description of this channel. Do contact me and I will teach you how I personally take my trades. I'll mentor you. Alright guys, so I'll see you in my next video.